Well, Tim, thank you very much for joining me today.
Yeah, good to be here, Chris. Thank you.
So Tim, just to kind of give everybody an idea of why I've invited you to speak with us, I found you through Twitter. You seem to do a
hmm
lot of tweeting on investments that you're doing, both with dividend investing, buying shares of dividend
hmm
producing stocks, as well as you do some playing in options. So, wanted
Yeah.
to bring you on today to talk a little bit about what you're doing, why you're doing it, and what your goals are. But I guess to kind of start things off, you're not a stock trader by profession, right? Your
No,
your
yeah,
your
I'm
main
a,
day-to-day work is something completely different than stock trading.
it is, I'm an IT guy. So, I guess I'm analytical, but not in a stock market sense, at least not professionally. So, yeah.
Good. Well, and from my experience working in IT as well, it
Mhm.
seems like one of the benefits, especially if you have the ability to work from home, is that you can kind of keep an eye on your investments as you're working, even if you're not
Yeah,
actively trading. Just kind of keep an eye on things, and if things do, make a sudden change or whatever, you're right there and
right.
and can address it on the spot. So great.
I,
So so
I've definitely found that the times that you're in the office, you know how it goes, and your mind's really engaged on something, your team's working on, you're working on a project. If you have something that's open, especially with options investing, it can quickly go the other way on you in that 4 hour period that you're not paying attention to it. So it's
for
always good
sure.
to have eyes on it. Yeah, yeah,
Yeah. Well, and it's kind of interesting when we look at what some of the events that have occurred here recently. Of course, we had the
yeah.
failure of Silicon Valley Bank, and you're based in
Right.
California, is that right?
Yes. Yeah. Southern
So
California. Yeah.
okay, so this was probably as big, if not bigger, news in California than anywhere else across the country. But obviously, we've had
Yeah.
that. Yeah, and
hmm
then just in general, we've seen a lot of volatility in stocks. Of
Yeah.
course, last year we saw a big decline. Starting the bear market. I think there's a lot of question now. As to whether we're still in a bear market or have we started to emerge from it.
Yeah. Yeah.
I guess let's look at your experience a little bit. And I guess
Sure.
my first question for you is,
Mhm.
how did you first start getting into either dividend investing or options investing?
I I've always used Twitter as like an auxiliary social media, not something that I use as a primary source of information for anything. I always had an account, browsed through it. I think during, right when the pandemic really hit and took hold hard, I had been browsing through Twitter because it was a great source of information at the time and just came across accounts that were talking about dividend investing. It's something I had heard of before. I know my 403B for my retirement account has dividends coming into it, but hadn't really looked into it much. And so I kind of read through this stuff and I was like, that seems interesting. Maybe I'll buy a couple of shares of something. So I created my TD Ameritrade account because I seen the commercials and they were catchy. So I jumped on and I bought some Microsoft stock because I do that for a living. Why not, open the cash register on the other side, right? So, um, and I was doing great. And I was like, oh, wow. And then, a dividend hits and it's like 50 cents or whatever it was at the time. And I know it seems like a little amount, but I didn't do anything other than own the stock to get that, right? So like I was like, oh, man, there's a thing here. Like this is kind of cool. So I started looking at other avenues. I was like, oh man, there's like, there's banks, there's all kinds of things out there that I could start investing in. And I made every mistake in the book. I think everybody that comes, forward and says like, hey, I do great, but I make mistakes. I think that's just pure honesty, right? You're being transparent because you know, I jumped all in on like the high yield, stuff. And it's like, oh man, this is not the way to go. Like this, I gotta kind of change this up. So I learned. Um,
Why
and so
why
yeah,
is that? What was the challenge that you saw there with the high yield stuff?
I think really what it was, it came down to portfolio balance. I needed to diversify. I can't just, put 100% of my portfolio into like, the time when I was learning, it was new. Something like QYLD, not knocking that whatsoever. It's a great premium income, a vehicle for people. But I put everything I had, well, not everything I had, but I put my entire portfolio into that. And I was like, hey, I did it. Like I'm the smartest guy ever. And that's not how that works. So, um, I just realized that having that diversification, even in an ETF, having different ETFs and stuff is really important. You know, I was very new to investing. Again, I was, you know, I was playing one on TV, people like to say, right? Like I had seen it. I figured I was the expert. I got this. I got an analytical mind from work, right? So I'm like, attack it. And I learned my lesson. I got burned a few times. I figured I was a pro options trader, not a pro options trader. So yeah, it was a humbling experience. But I learned a lot, and you know, we talk about tuning, Chris. You know, one of the reasons I think I put that stuff out there is just to really show people not only what you can do, but the mistakes that can be made too. If I can teach anybody a mistake that I made that maybe might save them from making the same one, that's awesome.
Sure, sure. So we've talked about two different things here. We've talked about dividend investing, but we've also talked about options investing. Did you start both at the same time, or when did you first get into options trading?
Options trading is more of a recent thing. So in my my investing journey, I started, you know, I kind of like to call myself an income investor. You know, I'm looking for dividend income, like you said, and then options income is relatively new. So I knew I knew the dividend part, but I knew about options, but all of my options trades were buying calls, buying puts. It was the typical trading, right? And I would sit there, and the second I bought that call, straight down, elevator down. And I was like, wow, I'm really bad at this. And I started to look at different ways to do this. And then I came across an article talking about cash secured puts and covered calls. I immediately went to several websites. I always kind of, you know, move around and validate what I'm looking at and make sure everything's kind of like lines up. And then I started paper trading it. And I realized that, you know what? If I'm wrong on a cash secured put and I want to own 100 shares of that company, like I love JP Morgan right now, right? If I can get 100 shares of JP Morgan and I get paid for that, if it comes down, oh, hell yeah. Like that's a thing. Like I could do that. And so I realized that this is an actual thing. And, you know, so there's some guys on Twitter, I think Wealth Coach Mac is one of them, you know, that he's a super smart guy. And he's very like transparent about his trades and everything that he's doing. And I kind of follow what he was doing and his thoughts and, you know, the way that he approaches those trades. And I learned a lot. I learned about Delta. I learned about Gamma. I learned about all the stuff that options trading really needs. And then what really hit the big time for me was I finally hit 100 shares of Amazon. I started my Amazon stock journey when Amazon was $3,000 or whatever, $2,800, and they split. So I was able to get 100 shares and start selling covered calls. And it's been a wild journey, you know, going from covered calls, cash secured puts. And this month, I think I posted up that you'd seen that I for the first time in my investing journey, I generated more premium income than I did dividend income. That's wild to me, man. I don't, you know, there are so many things like, you know, like you always get humbled every time you think you have it, right? But there are so many things that went right last month. Dividend investing was like, it was the highest I've ever been paid in dividends. Options premium was just on fire. And I know we had a lot of volatility that was very helpful. But I continue to learn, you know, as things come my way, you know, with the options. And I love trading like cash secured puts and covered calls, a good mix. And I feel like it's a great strategy to include in your umbrella of investing. I know some people do that as a primary source. For me, it's just part of my whole strategy. So
sure. Well, I think if you look at, you know, a lot of the information out there when they talk about stock and options trading, that they look at them as very complementary, right? You can do both. You don't have to pick one or the other, and they can very much support each other. And a great example of that, as you just explained, is that you don't have a problem owning 100 shares of JPM. So selling a put on JPM is a very low risk endeavor for you, right?
Yeah.
Worst case scenario, you get the premium and 100 shares of the stock that you're interested in, you know, or you get the premium and because the price never dropped that low, you get to sell another one the next week and do it all over again. Or the flip of it, you know, for JPM is if you do end up with the shares, now you can sell the covered call for it, right?
Yeah. And there are shares that I'll do the wheel, like a wheel strategy we're kind of talking about, right? It's cash secured puts and then doing the covered call when you get those assigned shares. There are stocks like, let's say like Amazon I have right now. There are stocks that I'll deploy the wheel strategy on and a more aggressive approach. In other words, all the delta will be a little bit higher, right? So the chances of those shares being called away is higher, but I get more premium for it. And Amazon's been a wild ride, so you can kind of imagine how that goes. But something like let's say JPM or other ones, like I really kind of want to keep those shares. Those are dividend shares, right? Those are shares that I'm interested in keeping long haul. So I'll be a little bit more conservative in my approach on Delta. Like, say let's, sub 20 for sure, like, so it'd be like 10 or 12 or something. That's not a lot of premium, but it's still something. So that's kind of nice.
Yeah, for sure. So what are your favorite stocks right now? You mentioned JPM, you've mentioned Amazon. Anything else that you're looking at?
Yeah, I was paying attention to BLK. That's BlackRock. BlackRock is, everybody knows BlackRock is a beast in the everything. Actually, I don't know why I say just say financial, but they're everywhere. They own everything, I think. So BlackRock is one of those I've been adding to slowly. It's a stock in the right now. I think it's trading at 666, so that's hilarious. But when it drops below my dollar cost average of about like the high 500s, I'd like to add to it. That's a crazy dividend stock. It's a company that is a behemoth. It's not going anywhere. So I'm kind of watching that. I'm also watching, GPM, as I mentioned. I'm also watching 3M. 3M's been on an interesting journey since their litigation problems kind of began, and they've dropped quite a lot. And it's not over yet. I use 3M products, I think, every day. I think almost everybody does in some way, shape, or form. So those are the few of the ones that I'm looking at. ETFs wise, I'm always paying attention to ETFs. I pay attention to the SCHD, the darling of the Dipswit community, as well as.
And you've been investing a lot in that recently over the last couple of months,
Yep.
I've noticed. Yeah.
Oh yeah, position has grown quite a bit, especially when it got a very attractive level of drop below 70 for a little bit there. Also, JEPI and JEPQ. Those are the covered call ETFs from JP Morgan. I'm a big fan of those. They're a percentage of my portfolio, but I talked earlier about QYLD and those yield traps. So I don't have QYLD anymore, but I do have those two. But I feel like in a diversified portfolio in mine, it's not for everybody. It has a position, it has a place. And then DIVO, so Devo is the other one that I'll snag or I'll be watching. So it's that's my good mix of ETFs and stocks that I'm kind of paying attention to right now. Great.
So, if I'm somebody who's interested in trading options, I've never traded options before, but I see Tim, tweeting about it on Twitter, and now I want to get into it. What's the first thing you would tell somebody to do if they're interested in trading options? How would you recommend they get exposure or get started with it?
I would always start with either, if you're a visual learner, there's some great YouTube videos on the strategy. They don't need to be 45 minutes. They could be 20 minutes, but go through and understand, this is what this is and this is what this does. These are the pros, these are the cons, right? So you kind of understand what you're getting into. You can also read about it if you prefer that style of learning. That's perfectly good too. The other thing is to follow people on Twitter. Twitter's a phenomenal place to follow people who do make just premium options income. That's what they do. And a lot of guys, like I talked about Mac earlier, these guys are phenomenal to follow. They'll post everything. They're very transparent. Even if they're not winning, they have to roll something. They have to close for a loss. They'll talk about it. So pay attention to that. Start to learn how they do things, why they do things. And then paper trade for sure. The first couple times, buy your fake 100 shares, sell a cover call on it, understand, treat it like it was real though. That's key, right? Because paper is easy to kind of I'll just go hog wild. No, treat it like it was real. Then you can finally move on to actually real trading. The final bit I would give people is to target stocks that are lower, depending on your portfolio value. You see me talk about TQQQ, triple leveraged QQQ. I trade that maximum. I mean, if you get assigned those shares, let's say it's at $2,500. It's at $25. That's $2,500. That's still a lot of money, but it's nowhere near getting assigned like QQQ where you're at 30,000 plus. So
yeah,
trade in your ability, right? Kind of watch. And I think adding all that up, finding those stocks that you want to trade that are within your range, and then trying it on paper and then trying it for real. There's a lot of success. It's not 100%, nothing is, right? But I think most people will find a lot of success using a similar strategy.
Sure, makes sense. So
Yeah.
since you brought up Triple Q and TQQ, both of these are tracking NASDAQ. Is that right? They're
Yep.
following the
Yep.
technology space.
Uh-huh.
And the major difference between them is the leverage, I guess you
Yes.
could say, or
Right.
the variation that you're going to see in one versus the other.
Oh yeah.
TQQ being a lot more,
Right. Triple leverage.
will
Yeah.
increase a lot more, leverage. So I'm curious from your perspective,
Mm-hmm.
if the cost of the stock is not important when you look at those two.
Mm-hmm.
Would you trade a different type of option strategy for one versus the other? Would that affect you at all based on knowing how those two trade?
Mm-hmm. Absolutely. And as a matter of fact, somebody had asked me this the other day on Twitter. It was a great question. I love when I can answer those kind of questions because it challenges me as a learner too, right? Somebody asked me the difference between QQQ and TQQQ. To say four, I don't know if I said four Qs or not. Sorry. But the difference is one, I had a weekly expiration on, right? So it was a Friday expiration. I think it was 8 days I opened it on a Friday. So what it was, like 8 or 9 days to expiration, right? QQQ expires daily. So I can do an options trade or a cash secured put or a covered call. If I don't own 100 shares of QQQ, so I don't do that. But I could open a cash secured put for the day and it expires at the end of the day. And if that's the way I want to do it, great. But if I did a weekly, QQQ could move like a lot. So I don't find myself being that forward thinking as far as like, yeah, I really have this down. But like a day and a half, let's say like 10 o'clock, like about an hour ago or an hour, 10 o'clock Pacific, 10 o'clock market time. I would open a trade for the next day and see, kind of where I want to set that delta on QQQ. If I had unlimited funds or bigger amount of funds, I would trade QQQ in a wheel strategy and be a little bit more aggressive on how I approach that, and I would definitely, TQQ has its place, but if I had those funds, I think QQQ would be my target for sure. A much bigger part of the target. I would do multiple options instead of just, I can really only do one at a time right now.
Sure. Makes sense. So let me put you on the spot here a little bit, since we've talked a lot about your trading. What would you say is the single biggest mistake you've made either with your options trading? Well, let's just stay with options. What's the biggest mistake? And again, everybody makes mistakes. So I'm not putting you on the spot in a negative way, but just for everybody's education, what's the biggest mistake you've made from an options trading perspective? What's one thing you wish you could go back and have changed?
I think two things is, one is everybody has a different way of tackling the options. I'm talking about buying options or selling options, right? Either one. If you're following somebody blind, that is not the way to do it. I mean, you might get lucky. I just don't see it. So I made in my journey, I subscribed to every, Discord you could or whatever, I thought I was, going to be the best. And I wish I hadn't have done that. I learned, but I didn't learn in a way that was helpful to me in a market sense. The other one is when I was in my covered call journey, I had Amazon and it skyrocketed. I went sideways on the trade hard. And instead of rolling it over because I was new, I thought, hey, I'll just close this out. And I took like a $800 hit or something like that on that option. And I was so pissed at myself. I could have attacked that in a better way. I wish I could go back and slap myself pretty hard for that. It doesn't sound, I know for some people watching, this doesn't sound like a lot, but it's a lot to me. So I made a mistake. I could have tackled that strategy better. I could have rolled it out and up. I could have done things where I didn't take that hit. It wasn't necessary, but I didn't know better. And the people that are out there in the community, if people have questions, and I have people that hit me up on Twitter, ask. Like, if you're not sure, ask. It doesn't hurt to ask. I love when people hit me up, and I'm sure others do as well. Sharing that knowledge, right? If I can save somebody from taking an $800 hit, and kind of tell them hey, this is what I did. If you want to do that too, I'm not a financial guy. I'm not official in any way, shape, or form, but if I can help somebody learn a lesson from my lessons learned, like I talked about earlier, I'd love to do that. But yeah, so blindly following people without doing your own style of trading and not fully knowing the strategy before jumping into the real stuff, it's probably my two biggest ones.
Yeah, great advice there. So
Yeah.
I'm going to ask you to pull out your crystal ball here and kind of
Sure.
look through the rest of 2023. Where do you see the markets going, and where do you see technology stocks versus, since we've talked about technology stocks, we've talked about banking stocks,
Mhm.
specifically JPM. Where do you see
Mhm.
these two markets going for the rest of the year?
The question marks in my head is like, let's say that hypothetically we have, the Russian war right now ends with Ukraine, and we solidify the fact that inflation is going down and there's no recession. I mean, 4,400, 4,500 on SPX, something crazy, right? It'll go nuts. But
This is the
I just
optimistic
don't.
view.
Optimistic view.
Yeah,
Realistically, I think we're gonna, without one of those things happening, I think we're gonna be range bound. Could drop all the way. I don't know if we're gonna see. Don't know if we're gonna see the lows that we saw before, but I think we're gonna be range bound. I think the question you asked earlier, are we still in a bear market, is a big question mark, right? Like if we
mhm.
hit a recession, we're definitely going to be going down. Although the stock market likes to do the opposite, so hey, we could hit all-time highs, I guess. But it really depends on that. But I personally think that we're range bound. I don't have like an upper or lower number. I just see us like being in that range when we finally, because bear markets will have rallies, right? But the rally we're seeing last week was pretty sustained. So it was interesting to see if we were able to break through and maintain that. Today's not,
Yeah,
as good, but I think we'll be range bound, and I think it'll be a couple of years before we're able to pull out of it. I guess everybody likes to say that the stock market inevitably goes up. I'm hopeful that that's the case. But especially if there's a recession or even like a thought of one, I feel like it could be a couple of years before we kind of really make a bigger determination one way or the other. And so I play
sure.
it as such. Yeah.
Good. Yeah, it could potentially take another year or so to get rid of all of the baggage that we
Yep.
brought in from 2022, right?
Absolutely. Yeah.
Absolutely.
With the financial stuff recently, I took that advantage of that. Financials dropped hard. JPM was like a rock. Everybody was dropping like a rock. And I took advantage of that, scooped up that dip buy, and so it's looking for value opportunities like that, that I think in the long term, you're going to be really proud that you made those long-term investments if it's right for you. Again, adding to my GPM position, I was all over that stock dropping. But things taking advantage of things like that, if we do end up in a recession and the stocks drop, hey, that's a perfect buy opportunity, So
For sure.
yeah,
Great. Well, Tim, hey, thank you very much for sharing
yeah,
all of this with us today.
absolutely.
I'll put your Twitter handle in the comments, so if anybody wants to follow you, they can do so.
Sure.
And definitely keep up with what you're doing. You're doing a
I
great job with
will.
the options trading, sharing lots of great feedback along the way. So really
Appreciate
appreciate
that.
that, and
Yeah.
wish you best of luck with your trading going forward.
Thanks, sir. Appreciate it. Thanks for having me on. Appreciate that.
Absolutely. All right, Tim. Have a good day.
All right. See you, man.